Hello everyone and welcome back to Fun with Fitzy. This is 11.5 video 6 and the topic is going to be sales discounts. Okay, so we've looked at invoices in the past and we've talked about the terms, and I told you that I was going to get back and talk to you about what the terms meant. When you see something like COD in the terms section of an invoice, that means cash on delivery. So when the customer gets the goods, they are required to pay at that moment. On account of charge means full amount is due when the invoice is received. Usually a grace period is provided there so that they have a couple of days. Net 30 you've seen, this means it's due in 30 days from the date of the invoice. Net 60 means the same thing, only it's 60 days from the date of the invoice. Now these are the terms that we are going to get used to seeing. How you read this is 210 net 30. And what it means is you get a 2% discount if you pay within 10 days. Otherwise, the full amount is due within 30 days. 125 net 60 is how you read it. It means you get a 1% discount if you pay within 25 days. Otherwise, it's due within 60 days. Now, why would a vendor put terms like this on it? Well, the reason is they want their money sooner rather than later. Money in their bank account will earn interest faster than if it's in your bank account. So they put these discounts on so that you pay. Plus, it is a known fact that the longer it takes someone to pay, the harder it is to collect. So here we have an invoice, and this is in the books of the purchaser. So we're going to look at Nanaimo Marina, who's the purchaser. Again, we're switching GST to HST. It's not the correct percentage, but just go look. We're looking at the journal entry, not the percentage here. So they've purchased $411.90 worth of product. So as you know, the price tag goes on the purchase. The tax then is recoverable because the purchaser can recover their tax, and of course they owe the money. Now what happens if they pay early? So if you look at the terms on the invoice, which is what we were just talking about, it says 2% 10 net 30. So if they pay within 10 days of receiving the invoice, they get a 2% discount. And the discount is taken on the full amount. So here's the journal entry here. The accounts payable that they owe is $440.73. So they're paying off the invoice, even though they might not be paying the full amount here. You see in bank is only $431 because they're taking a 2% discount. But the accounts payable account needs to be cleared. So you have to put the full amount in there so this account goes to zero. How do we get the discount? Well, $440.73 times 2%, which is times 0.02, equals $881. So that's the discount. And this is an account that we're going to be using now with the merchandise company. Okay, let's talk about the books of the seller, so the vendor. Same invoice. They're expecting to receive $440.73 because they sold $411.90. They have the payable because they owe the money to the government. When they allow the discount, they use an account called discounts allowed. Okay, so that's going to be a debit for them because they're not collecting the full amount of cash. They're only collecting $431.92. Even though they're owed $440.73, they still put the whole amount in the credit for accounts receivable because you want to be able to clear the whole accounts receivable. If you only put $431.92, it would look like the customer still owed you $8.81. However, in this case, they were allowed to take a discount. So in the books of the vendor, the discount is called discounts allowed, and this is a contra sales account, whereas, let's go back, the discounts earned account is a contra expense account. You're going to find this in the income statement cost of goods sold section. Okay, let's look at the income statement now. Here we have the revenue section. Okay, so this is the income statement for a merchandising company. We start with revenue. Remember, revenue minus expenses is our income statement that we're used to seeing for service company. Now we have sales, and we're going to subtract returns and allowances, which we did in the last video. And we're also going to subtract the discount, because if they sold $403,955 worth of goods, but 21,000 were returned, plus customers took a discount of 5,000, really your sales were only 377,508. So that's called net sales. So net sales is your sales minus your returns minus your discounts. Net sales, you're going to need to know that. And again, here is your cost of goods sold section. So our formula for cost of goods sold is beginning inventory plus purchases. So net purchases, so beginning inventory plus net purchases plus freight in minus ending inventory gives you your cost of goods sold. But because we have discounts and returns here, we have to do some math whereby we're going to move things over. So we have our purchases, because we want to get our net purchases, is going to be our purchases less both of these two. And so we're going to add them together, move them over one, to add them together to get the total amount that we're subtracting from our purchases to get our net purchases. Okay, so how does this look? These two are added together to get this number, and we're subtracting this 22,000 from this to get our net purchases. Okay, so this is the whole cost of goods sold section. The rest of the expenses are the same as what we've been doing. These are all of our operating expenses. So ultimately we have our sales minus our cost of goods sold equals gross profit. And then our gross profit minus our operating expenses is our net income. So by now you should be able to prepare journal entries which include discounts in both the books of the vendor, which is discounts allowed, contra revenue account, and in the books of the purchaser, which is the discounts earned account, which is a contra expense. Also, you should be able to prepare an income statement with a cost of goods sold section for a merchandise company. And I'm going to just go back to this page here if you want to take some notes on that. You can pause it here. Thanks for watching. Hope this helps, and we'll talk to you later.